Okay, officially. Good morning. Happy Sunday. Welcome out to the Market Watch Group Sunday Market Insights. My name is Scott. I'll be your host. Okay. Let's talk about it. Let's get some housekeeping out of the way first. Education, illustrative purposes only. What we do is not intended to be a recommendation to buy or sell any financial security or product. We're not brokers. We're not advisors. Today's agenda, market posture. Very excited to have the conversation about what we see, what we think, how we want to trade. We'll include a quick look at the economic calendar. We have some inflationary data this week. Very important. We also have earnings starting this week. The 16th, I think, is our big kickoff. We'll look at that. What day is that? Wednesday. We'll see a slew of earnings starting off with financials and moving into more mainstream things next week. But going to be getting some information from there that we need to be processing. We also need to be mindful of anything we have on our watch list that has an earnings date within our trade range so that we can account for that when we put trades on. Sectors. My expectation, we actually haven't run a search. We should do a search on Tuesday. Maybe not Tuesday, maybe sometime, maybe Monday. Let's do searching Monday. That's actually what we should do. In fact, as I think about it, that's the perfect time to search because we have more time. But we do want to make sure that we see the same level of momentum and identify which ones we are more inclined to trade into this week. They're a little off cycle, which is good as far as providing us with leapfrog. We don't have everything giving signals at once because there are certainly markets that are like that, where it's like feast or famine. You have 1 or 2 days and you have to get every trade on that you're going to get on for that cycle. Now it's more like we have the ability to kind of get something on. They start moving. Other things are in the process of the setup. So there you go. We've been doing watch list maintenance, but Sunday's always the day that I kind of think to myself, do I want to remove something from the list because of its lack of performance, essentially, right? Okay. And trading plan section of the week. We finished section 1. Those of you who are new or newish, hopefully you got a good amount of time in. Moving on to section 2, which is market posture. So what we're doing today. All right, let's get into it. I checked to make sure the connection was good. But you guys know on Sundays, we never know. All right, it's still good. Okay, we're going to switch this actually to the 3-year weekly. Okay, first question. Are you doing your market posture before you come? I believe Stephen D is still doing it that way. Or are you doing it while you're here? I'm always curious which is found to be more helpful. So Steve C says Saturdays. Bob Rowland says here. Tony says here. Gene says here. Yeah, that makes sense. That's the same way I do it. Is here. I look at it last on Friday. Both, Greg says, I love that. Both for Sandy as well. Yeah, I did. I'll look at it Friday, but I actually have stopped. And I actually tend to, I like to be surprised by it while we get here. So, that makes a lot of sense. Okay, let's do it. What are we looking at? What do we have now? Let's get this added. Copy, insert 0713. Okay. Let's see. We're at a 1 now. We had a big jump a couple of weeks ago. Actually, let me do this. Right in this area here, from June 22nd to June 29th, we raised it a half of a point. So we kind of said, hey, look, this thing's... That's here. Right? We were kind of sitting at this point, wondering what it's going to pull back to, and then it popped, and we're like, oh, we can't wait anymore. We got to go. Most of this going into... Where's my drawing tools? Hold on. Let me find them. So this part was just simply just a boom, boom, bounce. And then we got here and we're like, okay, are we going to pull back? And it didn't. So all during this point, we were a half of a point. We were like, nothing had happened that would move us one way or the other. And then we got this day. We said, not only did that do it one pop, it gave us a double, gave us a half a point. Last week it moved and it crossed this red line. And some people might say, well, does that mean that we're going to score that now? No. Not yet. We need to see the higher low. I need to see where this is going to be. Then I can give that an extra little bit. I don't know. I'm thinking we're still a 1 here. I was back and forth on 1 1/4, but I was thinking to myself, if I didn't do it the week before, I'm not going to do it this week. So that's where I am. Is I was like, if I was going to do it, I was going to do it there. But I don't think that these 2 weeks combined equaled a 3/4 point jump. Steven and Sandy are both already at a 1 1/4. I have no problem with that. Obviously, if I'm going back and forth with myself, thinking about should I go there. Again, we don't like say what the market's not. I always say I would be cautious at a 1.5 or higher. I feel like that's maybe giving this market too much strength. If you're still at a 0.75 because you're like, I really want to see a selling cycle from this perspective, and we just haven't. Right, look down here. This was the last bottoming of the stochastics. Outside of that, this week, I'm going to go, actually, let me go back and make that red. So when I say this, you know what I mean. This week here that I'm pointing to in red, and then a month later, you got this one, which was even smaller. Those are the only two real pullbacks we have. So as such, we really haven't seen what we would consider a standardized consolidation that we think, okay, this is what the sellers did. Okay. Thoughts? I'm a 1. I've got a few people at 1.25. Steve C is a 1. Anybody less? Anybody less than that? Anybody still kind of holding back a little bit? Tony's still a 1. Okay, that all makes sense to me as well. Got it. Okay, I like it. Pretty good. Pretty good. As far as alignment within the group, I think we all see it very similarly. So there we go. Okay. Let's LJ go 1.25. So that's pretty much consensus here. This is 1 to 1.25. 1 to 1.25. All right. Let's go to short term. Now remember, if you're not all the way, versed in this yet, the long term is 2 points. The short term is 3. So here we're about half of what we can be, and so is this. So these are actually scored very similarly. It's just that the short term has more weight by what we're looking at here. So giving it a little bit more weight. So now let's go look at the short term score and see what we have. Those of you who scored it already, what are your thoughts? Let's isolate last week. So we've got 1, 2, 3, 4, 5. So this is what happened last week, right here. It did technically make a higher high, right? But we're not looking at that higher high like, oh, we have to score some points there because of that higher high. So my thoughts here are we're really starting to see a trend more than, right, back in this area we were scoring when it would make like a new high or a new low, but now that we are sitting here looking at this, whoops, let's see if I can draw a straight line this morning. Here's some bottoms. Here's some tops. That is where I see the measurement of the current trend. Give me your thoughts about this. Do you agree? Do you think that, now again, if this is as good as it gets on the short term, you can see we're somewhere in the middle of that, right? Like this is flat and this is as good as it gets, and that feels like it's just about what it needs to be. So yeah, okay. I'm going to stick it with it as well. No change. Steve C, no change. El Jago, no change. I love it. I agree. Any concerns from anybody as they have evaluated the various aspects. Any concerns with how we're scoring it, what we're looking at, what we think it means to us. Okay, let's keep going. Let's keep going. Okay, sorry, my mouse is slow today. Let's go to 1 month daily. Let me drop back. Oh, that's all I have. Okay. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6. It's only 19 days in our current month. That can go anywhere from, 19 up to 21 days in any given month. 19 days. And when you see what we have, all of this really is kind of getting stale over here. I think we could drop these 1, 2, 3, 4, 5. This one will still be here next week, but these 5 won't. And over here we have 3 sell days. Okay, so let's say we keep everything. What do we have? If we are keeping everything that we have, we have 3 sells, 1, 2, 3, 4, 5, 6 buys. 3, 6, 0. If we get rid of this over here, we are 2, 5, and 0. And if we just got rid of all of this, because we're like, hey, this piece of is getting stale, it's going to be gone soon, then we would be 0, 4, and 0. Yeah, let's see. Okay, what do we think here? We were on a 0.5. I was thinking about it, Stephen. If anything, I think this could be a 0.5 / maybe 0.75. If it was this here, 0.75. Yeah, I've gone back and forth on this. I don't know. I think I might just leave it. I get what you're saying. It is a good slope. We really didn't have any volume on any of these weeks, anything last week. All of this was close but no cigar, right? This one was the closest. It would have been above average volume if it were... It would have been above average volume if it were based off the 50, but we don't look at the 50. We really look more at the... we look at the 20. So I'm going to leave it. And Sandy's pointing something out where she's saying the volume that we scored is all in here. Because from this point, a bit flat. Overall, still positive. I'm gonna keep it at 0.5 for me. If you scored yours at 0.75, no problem. I definitely don't think it's enough for a 1, and I definitely think it's more than a quarter. So that's where I'm at. That is where I am at. All right. Let's keep looking here. No change, 0.5. Scored the same. Agree. Okay. All right. Love it. Love it, love it, love it. Okay, let's keep going. Let's get to the sectors and the major market. And we'll see where it puts us. Okay. Oh, let's take it while we're here. Let's take a look at the economic calendar real quick. Just a quick peek at the economic calendar. Okay, let's keep going here. What do we see? Monday, nothing. And then it just dives right in. Tuesday, we have CPI. What are the forecasts? Forecasts are not looking good for the Fed to be thinking about cuts. CPI, monthly CPI, expected to go up 0.2. Year over year, expected to go up 0.3. Core CPI 0.2, core CPI year over year 0.3. So across the board, we're looking for these things that are going up. I don't, if that's what happens. Now here's the deal. I'm acknowledging that there's been a few times already where economists are like, oh, the tariffs, they're gonna have an impact on prices, and yet we haven't seen it. But right now we have this forecast. Now, if it comes out as this forecast says, then I think at that point, let's pop over here. I think September's off the table. So right now, nobody thinks July. Well, here's the thing, Bob Roland. I know politically they're looking for rates to come down. But when you think about why do we cut rates, there are really two reasons. Because we can or because we need to. There's really not because we want to in there, right? At least if the Fed is behaving as an apolitical monetary machine, because we can, because we need to. And right now, I don't think we meet either of those criteria. Okay, that's a fair contention. He says he thinks it's political that it hasn't. But what would be the logic for it going down? If out of those two statements, do you think that it needed to or that it could, despite inflation stalled? Now, you're right that it didn't go up, but it also really hasn't come down, right? If you look at pre-new administration levels, the Fed talked about before the new administration, here's our plan, here's what we need to see. We need it back. In order to continue cutting rates, they need inflation at target rates, which is 2 to 2.5. And we just stalled in getting there. So Yeah, there's definitely something. But then let me ask you this. If this week they tick up closer to 3 rather than heading to 2, do you then agree they shouldn't go up or they shouldn't be cut? Let's talk about it as a group, objectively. If these are the numbers moving from here to here, and we all agree that economically rates get cut because they can be, because inflation is down, or they need to be because growth is slowing. My problem with political is you can't claim it's an amazing economy and want interest rates. That's a want, not a need, not a can. Right? If the economy is amazing, great. Let it be amazing. And then if inflation gets to a certain point, great. Cut the rates. Because you can. But if we're like, the economy is great, and then everyone's like, but what about labor? What about labor? Which is interesting because here we're all like, hey, actually, we think the labor market looks great. We think that there's no concerns. And every time somebody says, oh, watch out for a bad report, we're like, where did it come? It's not there. So I'm open to that being the case here. That if the rates, because I'll tell you, for me, this is at 2.8. This is barely into the range of target 2.4, right? 2.8, 2.4. At those levels, I would still say it's iffy. It's not really that you can at that point. Let's move this down to here. We don't quite have. We've only got one expectation out, so we'll look for this tomorrow or Monday, Monday or Tuesday to see. But on this one, PPI expected to up a tick. You can see the year-over-year numbers. That's what they're looking to get into target levels at 2 to 2.5, and we're at 2.6 and 2.7, so a bit stuck. So there it is. For me, we're not even thinking about July, obviously. The July meeting is in 2.5 weeks. 5% of people think there's going to be a cut. Nobody thinks that. September. Now I want you to notice. At September, it was 65% in favor of the cut versus 30 not. Now it's shifted to getting closer to 1-to-1. Why? Because when we see those numbers come out, and those numbers are rising, we think, yeah, that's going to make it very, very difficult for the Fed to do anything about that. Okay, October, December. So I'm only in September if the numbers come back in a more reasonable level. Okay. Let's see. Questions, comments, concerns, let me know. It's an interesting place where we're at. Stephen D, anything from you on this? I know you were expecting an interesting discussion today. I feel like this is part of where it is interesting, and we do have some data. So I fully acknowledge that the price pressures that people expected the tariffs haven't manifested. But the now remember, the Fed doesn't control the economy, but the administration is. So ask yourself if the administration is doing a lot of the markets like confidence and certainty, not ambiguity. And there seems to have been a new injection of ambiguity around tariffs. Right? And so, not the Fed, the admin. Got it. So you're on the same page as me then, because I think the Fed is kind of holding to what they said, and the admin is continuing to bring a lot of ambiguity and uncertainty and volatility into, trade policies and the such. So hey, I'm open to it. If they haven't, if companies have absorbed prices rather than passed them on, and that's why prices aren't going up despite tariffs. Again, tariffs are a tax, and we're paying it. That's how it works. And so if that's happened, okay. If that's what the American consumer decides they're okay with, then yeah, let's go. I'm all for it. Okay. Perfect. Well, I actually feel like, the Fed lowering the rates, we got kind of accustomed to really, really low rates. If everybody remembers, prior to that, prior to the Great Recession that led us to those 0% rates, where we are now is actually pretty standard fare, maybe a little higher, right? Maybe a little higher. And you are starting to see some of the Fed chairmen saying, yeah, maybe it's time to just sort of, and what I think they're saying is a preemptive, you're the little choke levers you have on your snow blowers or your trimmers, and you're just moving it a little bit to give a little bit more gas. It's not quite ready to go all the way, but you're giving a little bit more. I think that's their thought, right? It's not necessary, and it's not there yet. But it seems like it could be just slightly preemptive. And I think maybe that's what Bob Rowland is talking about, and what others are talking about is, hey, can we give it? And if they do, it's going to be a quarter point, and that's it. Like, if they're hoping the Fed's going to lower things back to zero, which I think is what the administration wants, is just to lower it back there. That can't happen. We all agree, right? Like, that cannot happen. Even if we lowered rates, it would be lowering them to, down another half a basis point, etc. So, okay. Good conversation. Let's go talk about major market analysis. I think the best way for us to discuss it is as objectively and apolitically as possible, in order to just sort of maintain some balance with it. Okay. What do we see here? NASDAQ is on top. S&P second. The Dow is third. The Russell is down here at the bottom. We move in 133. Here we had the S&P pop to the top, followed by the NASDAQ, followed by the Dow, all kind of in line. Small caps still lagging a little behind. 66. Then we look at our scoring position here. And we have the NASDAQ. Ooh. Now, here's the deal. We didn't see the Russell leading on either of the other time frames. This is the first time we've seen it move ahead of the S&P barely, and then it dropped back with it. So this is looking more favorable for us, most definitely, right? Seeing the small caps participating, and some of that is born of people thinking that interest rate cuts that's dropping interest rates is most favorable for small caps. Yeah, right. Come on, Russell. So we love seeing this. Is it enough to score? Not for me, not yet. Not for me. I would say it's good. If anything, sound is bad. What happened? You guys can't hear me? Can you hear me now? Okay, you hear me okay? Someone lost sound. I bumped my keyboard, but I was like, wait, I didn't mute myself, did I? Okay. The objective when somebody says, what happened to sound when I do a check and everybody else says it's okay, then the person who said they lost it can be like, ooh, it's on my side. Okay. No, I'm not going to score it yet, but this is looking good. This is, if anything, we're moving closer to a 7.75 than a 0.25, and that's actually good information for us to carry forward with into the week, where we're like, hey, I mean, you know, this market fundamentally is showing a stronger basis. Let's go look at the scoring. I'm imagining Sandy's going to pop out and back in, maybe. Here's the 22. So you can see for a minute the Russell popped to the leading spot. And then it dropped back down. So what do we have? We still have the NASDAQ leading. We have the Russell moving, kind of trying to move into second. I feel like this is very favorable. I feel like it's really favorable, but it's not enough for us to score it yet. So as I think about my score, another unchanged. Didn't change. Bob Rowland agrees. No change for Steve C as well. Love it. Thank you both. I love that we're getting closer to a 0.75 though. Right? Like as I look at this, I think when I look at the 5.25, I think what's going to get us to a 6? What's going to get us into the 6s? Because the 6s, and when we get into the 6s and touch on 7, we know that's our market. That's the market that we love. Risk is on. We take anticipatory trades more frequently. We're less likely to take losses and hold on to trades knowing that things are recovering. That's where we want to get. What's going to get us there? I could see short term getting us an extra quarter of a point. I could see long term getting us an extra quarter of a point. But we're going to need those because we're going to lose volume soon. I never expect volume to stay when we have it. I see if I can go find the last 6 or 7. Okay, here we are. And apparently I'm now kind of a liar because it is a 0.5, 0.25. It did stay in this one, but you can see it was a 0.5, then dropping to a 0.25. Okay, so it could stay at a 0.25. I'll accept that. Oftentimes volume drops, and it drops because the trend is now fully in place, and you can see we're very close to that. So I could see this getting up to a 1.5, this 1.75, maybe even a 2. And if that happens and this is 0, that doesn't matter. This is all the same. We're still where we need to be. That's it. Stephen D is right. I've always said we don't need volume to have a good score. Volume tends to move on a transition, but when we get to 5 or 6, I expect that to be a quarter of a point at best. Major market definitely could get another quarter of a point. We already saw it. We've seen sector rotation out of 1. We know it can get there. So, yeah, absolutely. I think there's a little bit more here. So out of this, we could see this maybe get another quarter or a half. That would put us to a 5.5, 5.75. That can get us a half a point. That can get us a quarter of a point. That's what puts us up near a 7. There it is. Where are we now? Well, we're not finished yet. Let's go do sector rotation. Yes, Sandy, progress or regress. It sort of is the kickoff, right? That starter. Okay. Communication services on the top. Financials, technology, industrials, discretionary. That's the growth 5, right? When things are bullish, we expect the growth 5. We're building things. We're financing things. We're talking about it. All those new things need technology in place. That's it, right? Those are the things that are happening. What about this? Utilities falls back in line, as does energy, as does staples, as does materials, as does healthcare. These are the things that we tend to see move when the growth things are moving out of favor. Then we think, it's getting a little bit more defensive. Let's drop down to 133. Industrials at the top. Utilities are still hanging around. Now, again, utilities we've looked at with a little bit of a filter, because we are acknowledging that there are 2 enormous industries developing right now with AI and crypto growth still strumming. They're expecting, if you look at the VIX, not the VIX, we'll get there in a minute. Sorry, I'm thinking ahead. I'm thinking, what are my futures for BTC? Sorry, guys, I lost my train of thought. BTC. Whoa. BTC just had a breakout. Bitcoin just had a breakout. Thursday and Friday, based on what? Upcoming legislation that they're expecting to be favorable. I don't know if it's legislation or if it's an executive order. We sort of have a lot more of one than the other these days. But something from the administration that is favorable towards cryptocurrencies, and you can see that they had a breakout. I mean, this was almost 10% in 2 days from all-time highs. So there you go. Well, that needs a lot of electricity. That's it. Those are the facts. Okay. So utilities has a little bit different connotation these days. Materials are in there. I would agree with that. It's a hybrid. And this is what's interesting, you guys. Thank you for pointing that out, Jaco. If you go back to 2009, 2010, 2011, 12, in that area, there was a point in time for about a year and a half when healthcare was the leading sector, and it was a growth market. It was healthcare. Everyone's like, healthcare? What the hell is going on? Healthcare that's defensive. No, it took on a new meaning based on the legislation around Obamacare, the Affordable Health Care Act. So we see things like that happen, and we have to be adaptive to it. And I feel like we've done a pretty good job adapting to that. So what else is in here? Communication services, technology, financials. The 133 is a little bit more of a mess. So let's hope that when we drop down to our scoring time frame of 66 days, we have a little more clarity. And in fact, we do. Technologies clearly. Now, what's interesting is 66 days is now basically the bottom. It's basically the bottom of our mini bear market that we had, our 20% drop after tariff relief day. No, what did we call it? Tariff liberation? I don't know. Whatever it was. Caused our market to drop. Now, as we come out of it, we can see who's leading us. Clearly, technology, which is, of course, a mainstay for us. A lot of where we put trades on are going to be in here. We love chips. We like software. We like peripherals to that. I mean, all of that is very strong. Second to that is industrials, and there for me is a deficiency in our watch list. So tomorrow, if you have been thinking, hey, I want to get better at searching, join us tomorrow night. We are going to talk about searching tomorrow night. How? We're going to search industrials. We have a few. And we even put a couple on, I believe, at some point recently. But this is telling me that we should have more. There's the market. On the 66 day right now, we only have 2 sectors ahead, interestingly. Who's close? Communication services and discretionary. Financials are still a little below there. Although I think when we go to the 22, you're going to see that the financials have actually made a jump. And we're seeing them pushing to get back into favor. Materials is here. Discretionary is here. I feel like we have what we're looking for. I don't see enough to raise the score. We're already at a 0.75. Based on the foundational strength here, well, I mean, honestly, here I'm not going to take it away, but here I would definitely like to see 2 more growth sectors above. And if I don't see them in the next week or 2, I will take it away. I'll be like, oh, I might have overscored that too soon and need to dial it back just a little bit. We'll see. We'll be patient. 22 days. 22 days. What do we have? Technology on top. Stephen D. I love it. Stephen D's already taking the step that I just described. He let his drop back. So what does that mean? That means that he was likely on the fence. He was thinking about it at a little bit higher level than I was and saying, I'm right on the fence here. So what do we do when we're right on the fence at the 66? The 22 decides. And that's exactly what he said. So I let the 22-day decide. Okay. And you can see technology is still leading, but second place is energy. And here's the thing that we have to recognize. The stuff that's going on that's caused pressure in the Middle East, that's not helpful to inflation. Typically, energy costs are a third of the inflationary pressures. A third-ish. And right now we're seeing pressures from there that are going to be taken into consideration. Okay, I just looked at the time. I've got to speed things up so we get through the watch list. We've already looked at the trading plan and the economic calendar, so that's the last thing. I'm going to probably take 5 minutes extra today. I apologize. If you miss it, I will send the focus list out with the email and post it, so that's what you would miss. Okay, let's see. Then we have industrials. Then we have materials. I see what he's looking at here. We're seeing a mix. Then we see financials kind of dropping a little bit here. Discretionary holding up. Communication services dropping a little bit. You can see technology went up, but financials and communication services went down. I'm actually, after I see that, I'm going to talk myself into the drop. The 66 day only had two growth sectors, and then we saw that kind of a shift in momentum. I agree, Stephen. I agree. You convinced me. That's a good analysis. I was on the fence. I think maybe I should have been more on the fence as I look at the 22 day. So there we go. Drop it back. Let's finish with the VIX, and then we'll hit the watch list. The good news is I'm going to give this 1/4 point. We got a lower high right here, which is great. The good news is the VIX is in the teens. It's 15, 16. We love that. We absolutely love that. Now, with that being said, am I thinking about a hedge? Yes. When I say I'm thinking about a hedge, this is not a generated hedge. A generated hedge is a higher low. This is not a higher low. This is a lower low. This is a lower low. But it's at the low. If you are carrying positions and you see this thing start to get some pressure building, like we take out that high, you're going to get a much better price on a hedge than if you wait. And yes, as Stephen mentioned, with the reemergence of tariff, I think that we need to be aware of that. So I think that if you're managing bullish trades, what are you thinking? Keep them tight. If you're carrying bullish trades, absolutely a hedge is warranted to consider, 100%. What's the hedge look like? 5% out of the money, 5%. 5% out of the money, 5 weeks out in time. That's what I'm going to look at. We'll address that tomorrow morning. We'll look specifically at what that says. So, okay. But for now, we did get the lower high. We went from here to here. It's still de-escalating in a way that is going to make me score it. As such, I'm going to give this a 1.25. Definitely warrants it. If you were just to pull up this chart and be like, hey, where do you think you would be at this point in time? I'd be like probably 1.25, 1.5, based on the way that we've dropped down out of what we were at with that April. 100% looks good. Okay, final call. We stayed the same. That's actually fine. I want you to remember that when we first got here and we got to 2.5, 2.5, 3.25, 3.5, 3.5, we had great trades going on in that period of time. Fabulous trades. We don't need this thing to be growing for us to have good trades. What this is telling us is that we're in a good position to find the right trades. That's how I see it. That's what I'm looking for. Let me know if you have any questions. I finished 5.25. While I start getting into the watch list, let me know where you all are so we can get maybe a bit of consensus. And then let's rattle through this watch list and get our short list going. 5.25 for Stephen D. 5.25 for Stephen C. 5.25 for Scott B. Sandy's a little bit more, 5.5. Yeah, I feel like that's a good spot. Let's start at the top with Apple and move our way down. Apple's definitely still setting up for a trade right here, 100%. The flag is on. If we pop out of this, that was close right there. You got the candle, but not the stochastics. If you anticipated, you're in. It's a hiccup. That's valid if you anticipated. I'm waiting for confirmation. That's a good-looking position. Amazon actually was viable on Friday. Could have taken it Friday. And in fact is one that I'm thinking, maybe for Monday. The only thing that I didn't like was a little bit of a regression in the the consumer discretionary. But Amazon, definitely still on the list. APH. Yeah, we took it. We're in it. We love it. Looks great. Look at that beautiful looking trade. This is what it looks like. People are like, are we too late on Monday? Absolutely not. 100% not. That looks like it should. Let me know if any questions, but that's on the list and on order. BAC. I'm going to keep it on the list, but at this point, I can't really put a trade on. We're too close to earnings. I'm going to put an asterisk next to it because of earnings. Caterpillar on the list, but you know, it actually fired a signal on Wednesday, moved on Friday, pulled back a little here. You could, if you were thinking continuation, try, but I feel like I'd rather wait. I'd rather boost up our list and then see if we have something better coming. I'm going to keep CLS in and out. Okay. APH is solid. I like APH. CLS, it's a little bit of a grinder. It's not really giving good pullback signals. COF. I think there's time for COF. This is the one I'm looking for right here. A little bit of movement. I think we have something. So yeah, I'm putting COF on the list. Has a little bit more time than the others. An extra week almost. Cisco. Still on the list. If it can recover. It really is only pulled back from 70 to 67.5. That's not a lot of selling. Diamonds. EA. No. And in fact, I'm kicking it off the list. No, I'm not. It owes me money. I'm going to leave it there, but I'm not going to trade it. GEV. Looks good. Needs a pullback. Not me for gold. Google. Google was a trade on Monday or on Friday. I was actually looking between APH and Google. Did anybody pull the trigger on that one? That was one I was considering for an alert. I think that one looks strong. Goldman. Okay, so Goldman looks great. You just don't have enough time. You just don't have enough time. Hood. Hood has time. And it looks like it's trying to play out. Okay, let's put that on our list. Howmet. Maybe. IBM. Not yet. Okay. Meta. I still like Meta. Meta is on the list, but Meta is in a trade. And it's going through a hiccup. Has it broken support? Remember the rule. If the original reason for getting in the trade is no longer valid, get out. What was the reason for the trade? Bouncing off that support level. Has that support level broken? No. I want you to notice here, the same kind of a thing happened and then it goes. So we can sustain through a hiccup. No problem. Gosh, Morgan looks great, but it's got earnings. Let's just kind of hold off and see. I'm going to put it on, but we've got earnings. No there. Micron. I'm in. It's same thing. I got the signal, little hiccup, still in. Yeah. What am I thinking now? Come on, buddy. Let's get you moving here, huh? Netflix. Maybe still. Maybe. We were talking about Netflix for a potential debit spread. Nvidia's a little overextended. PLTR. I think it still has something. Let's see what it can do. We're in this from back here. And now it's doing this. Great. Great. Oh, time to water the bonsai. That's my alert. Roblox. I'm still in that one. You can see it's still trying to keep up with this. So if you're still managing some trades, I get it. RTX, I'm actually still managing this one. Just sort of grinding along. I've got time before earnings. If I can get this thing up to 149, great. Let me know if anyone's still in any of those. Tesla, no interest. TSM, getting close to earnings. Looks strong. We just don't have much time, and I already have some chip stocks on. Uber looks great. Let's put it on the list. And Visa. Ooh, Visa was trying. Now as it pulls back, I'm less certain. Let's finish with Walmart. No, I don't like Walmart. Walmart's pretty sideways. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Still got 17 on our focus list. That confirms bullishness for me. So there it is. What are we working on this week? Section 2, market forecasting, what we just did. Make this into a routine, then develop routines of what does your posture mean? What does your trading posture mean? What are the implications? What do we typically mean when we talk about implication? What types of trades? How long do they last? How do we adjust risk? What strategies or systems make sense? And what are our tactics? Lastly, hedging. All of that falls into market forecasting. So put a little time in, get that looked at and focused on, and we will go from there. I'll see you guys in about 21 hours. We've got some trades. Absolutely, John. Absolutely. Bring those. That is something that Glenn is comfortable with in the working sessions. Something that I'm comfortable with in the working sessions. We can even start with that on Monday. Whichever you come to, just be like, hey, here's a potential trade. How would I do this with a debit spread? Absolutely. Great plan. Bring those questions. Thanks, everybody. Have a great rest of your Sunday. Enjoy the rest of your weekend. See you in the morning. As always, happy trading.
Recordings.